Okay, so welcome traders. Time once again when we'll be making an update to see what kind of trading opportunities lies ahead of us and how we can be capitalizing on these potential moves that possibly could be happening in the next couple of days. As usual, I'll try and keep this update as educational as possible. But before we go into the charts, there is disclaimer explaining that trading foreign exchange and the global financial market is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and I do thank you for your time on that. Alright, the pair that we'll be analyzing right now is the Euro Yen, and presently what we are looking at is the monthly time frame of the Euro Yen charts. Now, starting from here, we can see clearly that the market has just made this nice impulse correction and another impulse to the upside. And generally speaking, after an impulse and a correction, what you expect is an impulse to the upside, which the market has currently done here. So, we do expect that from here now that we've had this nice impulse to the upside, what we do expect is that at some point in time the market should have a nice correction specifically to this area, which may act as a confluence of support, knowing fully well that this area indicated by this magenta rectangular zone was initially the resistance point here. So at some point in time we do expect that the euro should make a correction to this area, possibly before its continuation to the upside. So everything in the monthly time frame seems clear. Going down into the weekly time frame, what do we see now? From a weekly perspective here, what we can see really is that the market has just created a pattern here which I want you to see. Now, what the market has done is that it has created this overextended W formation. Now, generally speaking, after an extended W formation like this, what you expect is the market to retrace to the downside to test the previous resistance level, now turned support. So we do expect that everything from here at some point in time should retrace possibly to the downside for a retest of this previous resistance, now which we expect to become support level here. So the monthly time frame is gradually looking bearish, and from the weekly time frame also we are seeing that we do have this overextended W formation, which we expect that at some point in time should begin to retrace for a correction, possibly to the neckline of this W formation. Now, going down into the daily time frame, what do we see? Now, from a daily perspective, here, we can also see clearly that the market again has printed this nice W formation here again, and like I said not too long ago, whenever a market has printed a W formation like an extended W formation, we do expect that the market should come back to test the previous broken resistance, which should now turn support here. So everything is gradually looking bearish from a monthly, weekly, and daily perspective. Now, how can we be how will we be approaching this potential shorting opportunity which we have here? Now, the monthly, weekly, and daily time frame combined gives us a good direction of the market, but when it comes to confirmation and entry, what we have to do is to go into the intraday time frames, like the 4-hour and the 1-hour time frame. So from here now, what we can see, what we will do now is waiting for the candles here to move from a bullish situation to a bearish situation. So from this area here, if price will continue moving up like this, we will be monitoring the situation and waiting for price to shift from a bullish situation as we would have to a bearish situation. And as soon as the market will shift from a bullish to a bearish market, we will be taking a nice shot with a very good risk reward ratio for a move back to the downside and for the market to complete this W formation that we had seen in the daily time frame. So guys, I'll be posting an update when this market eventually plays out, and cheers for now. See you in my next update.